Hello, everyone. Ivana Taylor here, and I want to welcome you to today's Bizapalooza chat. I am so excited today because we're talking about something that I am not very strong in at all. I'm going to put it all out there. But I got to ask you the question, did you realize that your business is actually a financial investment? And as an investor, you have choices. You have a lump of money that you can invest in different ways. You can invest in a vacation with your family. You can put that money in the stock market, or you can invest in your business, and you can invest in equipment, and you can invest in employees, and you can invest in growing your business overall. You can invest in traditional stock markets, or you can invest your business. So that's the bottom line, but the choice is yours. Now, one thing I have noticed is I've been working with several business owner clients is they tended to view themselves as employees or business owners rather than investors. So it seems like we have our businesses and then we have our investments. So is there a way to incorporate our investment strategies and our business? Well, in today's show, we're going to talk to Jim Katzman, journalist and financial services expert, as well as a featured member of our Bizapalooza chat community. And he's going to help us with this and so many other things. Jim, welcome to Bizapalooza chat.
Hi, Ivana. How you doing?
I am doing great today. It's a bright and sunny day here in Cleveland. What's going on in Maryland?
It's bright and sunny and probably a little bit slightly warmer than Cleveland, but maybe not much.
So, Jim, before we get started, talk a little bit about yourself because you are a man of many talents.
Well, I had, after I graduated from college, I went into the Air Force and wound up doing a career in public affairs. And after I retired from the Air Force, I was still doing public affairs type work as a contractor and government worker, but I also had put my 2 cents in on, resume online and got picked up for doing life insurance and investments. So I got my license in life and health, and at that time, securities license, but now I keep the life and health going. So I do that as on the side for life and health. So if you ever look me up, he kind of looks a little bit of, schizophrenic because, well, is he a writer or is he financial? The answer is yes. And so I, as need be. So I know how to put subjects and predicates together, and I also can add numbers, and I also help to communicate with people better too.
Got it. So let's talk a little bit about small business owners as investors. So how should a small business owner think about financing money if they run a small business?
I think a good way to look at it is a small business owner should think of themselves as a head of a family. You have your head of your family, and you have your small business owner who's a CEO if they take that title. Well, if you're head of a family, you're the CEO of your family. So you have similarities, and you have responsibilities as being the head of your family. You also have responsibilities of being head of your company. That works both ways. You can have a small business, and what if the case is you're an entrepreneur? You're in your business by yourself. Same difference. You have responsibilities not only to your business but also to your customers. So you have to keep that in mind. You have your business, your customers. It works both ways. If you're a medium or a really small company, you have those responsibilities. And when you're talking about using your money, investing your money, you have to keep those criteria in mind. How your investments fit into your responsibilities.
So what is it that makes a small business owner different from just a regular consumer investor?
A regular consumer investor, they're looking out for a lot of themselves, or so they might have, say, okay, I'm this young, I can take more risk. As I get older, I take less risk. When you're in a business, you don't really have that risk variation as much. because you have to protect your business, because your business is depending not only on you, but your employees, all these people who, depend on you for your welfare. So you really have to focus. Whereas, again, if you're a person who's younger, you can take more risk. If you're a business owner, you really have to look at protecting your principal. So that means when you're putting your money into something, you really need to put in something that if you have another market downturn or, just drop off, in the Great Recession, that was a 40% loss. Well, you can't afford to do that for a business. So a business, you might find yourself putting more money or greater percentage of money into money market, CDs, something that'll protect your interest. If you invest, you might want to put it in an indexed market fund. So in other words, if index funds have a guaranteed return of 0%, which sounds terrible, but remember, that's a guaranteed return. So if the market goes down 40%, you've lost 0. And if the market goes up 12%, maybe you gain 7. You said, well, that sounds kind of crappy. The market went up 12. Why didn't you only get 7? Well, that's how the companies make, break even, because they use that extra margin to pay for when the market goes down. So the companies aren't in for charity, but, by the same token, you can work with them and still have a sensible place to invest and have a decent return and still take care of your company and your people.
I just think that's great advice. I'm not sure that I knew that exactly. I knew what an index fund was, but I didn't realize what you just said. So when you're thinking about securing your investment, one of the other things that I think about as a small business owner is as I said earlier in the introduction, I have choices. I can invest my money in the market or in index funds, and you probably should. It sounds like you should be well balanced. But what are some smart ways that a small business owner can also invest in their business, right? Like as if you were your own, what would you call it, IPO?
Right. Well, one thing any business owner should do, and this applies to any size, big or small, is to cover their key people. So there are people in your company. If you're in business by yourself, obviously you're the key person. But even if you have, a bigger company, you might have several key people. Well, what happens if one of them dies? And the reason they're called key people is if you lose that key person or persons, your company can, wither and die. So the insurance companies offer what's called key person insurance. Typically, these are term policies. Term policies usually go from 10 to 30 years. Your choice as to what have you, but you decide who your key persons are, taking a policy out. The company pays for the premium. And if the person dies during that term, the benefits go to the company, which means if the person dies, then the company has, $1 million, maybe $2 million, whatever your coverage is, to cover company operations during the interim. And then the surviving partners, survivors of the company, can decide at their leisure, well, do we have enough to keep the company going? Do we have to liquidate? But it's something that you don't have to make a decision in the heat of the moment when you're likely to make bad decisions. So that's a key investment you want to have is a key person coverage. And again, I do all kinds of insurance policies, term and otherwise, but typically it's term policies that do what they do for that sort of case.
I love that tip because I think term policies are not nearly as expensive as a lot of other policies. And that's just a great insurance policy because you might get, if you're a consultant, you might get some type of business operators insurance. And this is just one more thing that you can get to sort of keep everyone on the even keel, yourself, your family, your employees, you sort of kind of keep that going. That's a great strategy. What are some other strategies that are great for small business owners?
Well, the first strategy is, for me, I'd want to reduce debt. And there are people who say, well, debt load is okay, you can write off and what have you. But, and this is a but that I don't know all the answers to, and many people don't, but they've passed the Tax Cuts and Jobs Act, if I'm going to get that outright. That's in effect this year, which means when you file your taxes next year, I saw one article of businesses should not expect to have as many write-offs as they are taking now. And one of the write-offs is debt. So, and what is debt? You are paying the lender, and then for what you pay the lender, you get a credit, a write-off. Well, now you're making the lenders rich. So I have a basic problem with that if you don't have to do it. So now, but if you're not going to be able to write it off, why carry the debt if you can help it? So basically you ought to have a plan to, get yourself out of debt, especially since you can't write off. So that's one aspect. And then you want to remember, again, this goes back, and I jumped a little bit ahead, but again, getting back to protecting your investment in a fund so that keeps your principal from dropping, or a lot or a little or a lot, and have it for the long run. So it's these index funds are interesting. Usually when you think of investments, you're thinking of investments go up and down and what have you, and that's normal. But an index fund, if the market goes down, you haven't lost, and then when the market goes up, your investment goes up. It goes down, you stay steady. So the investment is a step. It steps up as opposed to a wavy line. So stepping up is good, in my opinion. So that's a factor there. The other and the last part is there's, depending on your business, there's a temptation to get into high tech. Oh, here's the latest little shiny object we want to get into and jump on. Well, make sure it's compatible. Don't get into tech for tech's sake. Make sure that whatever you do is a good fit for your company. And if it's not, my rule of thumb is, if you have to think about it, chances are you shouldn't do it. And that applies to a whole bunch of things. That gets right down to hitting send on a social media account, or an email. If you have to think about it, don't do it. And if you have to think about, well, does this tech make sense? If you have to think about it, maybe you don't, or at least talk to someone who's already using it so you have a sanity check on it.
Last question, Jim. Anything you think small business owners need to know when it comes to investing in themselves and their business before we go that I didn't ask?
Well, the main thing is to be selfish. Think of yourself, and don't make the best decisions for you now. And if you're talking about investments, the best time to invest is now. So you may think, oh, well, the market is up there and it may come down. Yeah, it might, and it might not, and it might do this. But if you don't do anything, then nothing's going to happen. And you sure won't get a return in your mattress as good as you will even in a CD, even though those are lousy rates. But don't wait around, just do something.
That is such great advice. Jim Katzman, thank you so much for being our special guest in our special short podcast for Bizapalooza Chat. We're going to head over into the chat. So excited to see everyone and what we're going to talk about over there. More money talk about being a savvy investor in your business. Join us here again next Monday, and we'll be talking about more small business advice as we go. Jim Katzman, thanks for being here.
Thank you, Ivana. I'm glad to see you.